Hi, everyone, and welcome back to another episode of the podcast. This week, I have got Kevin Whelan on from the Wealth Builders and the Wealth Talk podcast that I was on the other week, and so grateful to be on. I know how much of a reputation that podcast has and how much of a reputation Kevin's business has got. So it was an absolute pleasure to be on that podcast. And if you haven't heard that episode, get yourself over there and start listening to it. And if you're not already subscribed to their podcast, please do. It's an absolute gem. So, Kevin, thanks for being with us today. Thanks for returning the favor.
Oh, it's great, and always a pleasure to talk to a fellow Geordie. And I know you might need a little help today, given the marathon you've just been on with Clubhouse. I hope you've got enough energy for your audience today. And if I know you, that you absolutely usually have that in spades, don't you?
Yeah, I think I've got a half an hour, 45 minutes in me, I think. So for anyone that doesn't know, I did a 24-hour Airbnb expert panel marathon on Clubhouse yesterday. I'm sure most of the listeners were listening in because there was thousands of people came through the room. We had experts from all over the world sharing their experience on Airbnb and how they've built businesses up, and it was incredible. The whole thing was just packed with value, and the audience questions, and it was just, to me, it was inspiring as well to see, you know, Airbnb is a thing, but how everybody makes it their own using that platform. You know, different businesses, different property styles, different ways they automate and systemize, different ways they collect payments. You know, the whole thing was, it was just fantastic to see how people spin that one product and make so many different revenue streams from it. And I guess that could lead us perfectly into this episode. You know, you're all about building wealth through many different avenues. And I mean, should we start? Do you want to maybe just give us a brief background and kind of go from there?
Yeah, well, you know, Kevin Whelan is my name, and the business I'm in is building wealth. And so I'm the founder of a community of people, Ryan, that's called Wealth Builders. It kind of does what it says on the tin, really. And the idea is we know everybody wants to be completely financially independent, right? So you're unaffected by Brexit, you're unaffected by economic circumstances, taxes, whatever comes in. You built enough steady income flows, recurring income flows from a multiple stream of different assets that make you financially bulletproof. And we have a blueprint that we walk through. We talk that there are only 7 assets that you can own to build wealth. So wealth then is quite scientific. And then once you know what you want, like your Airbnb story, you can just choose whichever assets or combination you want to play. And then by the use of great education, unbiased, and, you know, support with incredible integrity and connections in the community that share, just as you experienced the other day. The sharing is the brilliant part of all of this, the community. Our students work their way from where they are now to typically what they're looking for. And on the average, they're looking for about 10 grand a month. I suppose that's the average I get. 10 grand a month, I'll be happy. And that's what we do. So we walk them through that. And property plays a big role. Business plays a role. Intellectual property, you know, the 7 different ways you can do it, or 7 main assets. We refer to them as pillars. And if anybody jumps on the podcast, you'll hear us talking about pillars a lot. And so we've been going for quite a long time now. And so we've got a lot of people who've achieved their outcomes. And now some of those have become coaches in my own program. So it's my IP, but delivered through a bunch of coaches so that, you know, we can reach more people. And Ryan, my ambition is to have 50,000 people completely financially independent. And the plan there is to fill St. James's Park. As if it were wealth builders coming out and infesting the world with ideas on how they can be financially independent and not living a compromised life depending on what something else happens in the world. And that's my kind of, you know, funky vision.
Yeah, 50,000, we could probably all club together and buy it off them.
Yeah. we probably could. Well, I'm not going to talk about football or religion, right? Because
both are frustrating. So I guess the audience are going to obviously be thinking, you know, what are the 7 pillars?
Sure. I can describe them pretty quickly. And the best way to do that is, first of all, to imagine that my logo as a firm is a foundation. So if you can imagine a foundation, 7 strong, robust pillars in the middle and a roof perched on the top. And it makes a perfectly watertight building. That's the idea, and that's the sort of philosophy. But the easiest way to think about the pillars and get your own audience to be thinking about them and working with them is to almost draw a circle or draw a square, and then draw 3 legs coming to the left, and I mean, if you've got it on your piece of paper in front of you, 3 legs to the right, 4 legs to the left. So you've got like an unequal spider, right? So if they do that, so I'll give them a minute just to do that, and then they can fill it in, and then you and I can have a little chat about, what the differences are between the 7. So on the right-hand side, where you've got 3 legs, the first one is home capacity. So just write that down. The second one is pension, and the third one is investments. Now, as we think about those 3 pillars, they're the main ones that most people in the UK, in the US, for example, depend on for their long-term wealth. And it's the only 3 they have. And that's why I call them the traditional pillars. People live in a house, they got some pension, and they got some money in the bank and a few quid in the stock market, and that's what they hope will see them through. But it won't, because the stock market's too volatile. Cash doesn't give you very much. And most people live in their house. They don't want to rent it out and Airbnb it. They want to be in it on their own, living their life. And for the 95% of the population, that's kind of where they get stuck. They kind of do all of their activity, trading time for money and acquiring those 3 assets. Those who move forward to build wealth genuinely independently, and what I call an asset is something that puts money in your bank account while you're asleep. You can pass it on to good causes or your family if you wish. You don't have to show up, but the money shows up. That's the essence of an asset. So the 4 entrepreneurial assets we refer to, so the 4 on the left-hand side, are property portfolio. So in other words, something in property that's yielding you ongoing rent, a business that's yielding you recurring profits, not trading time for money, because I'll shift that back to the other side. It's just having a job. Intellectual property, so creating revenue from books, courses, materials, memberships in my case, and then joint ventures. So that's where you collaborate with somebody else with a view to creating recurring income. So they're the 7. And when people look at that and see it sort of written down side by side, it sorts of become obvious what the differences are. So those on the left-hand side are putting their heart and soul in. They're making a commitment to do. They're driving value. They're finding value when the market goes down. They're still being creative in finding value. And what they're doing is they're putting more and more under their control, where they can, create that value, keep that value. Whereas on the right-hand side, you're always in the hands of something else. The market goes up or down. The advisor's charging you fees that you can't escape because you're stuck in a place where fees are just a natural phenomenon, which is another soapbox I often get on. But, and when you're getting to 10 grand a month, it's always good to be looking at, well, how much is coming from each of the 7? And that's what we get our clients to do. And mostly when they tot it up, what would come automatically in their life if they stopped doing what they're doing right now and couldn't do anything for a year? What would be coming automatically into their life? And most people get a shock. And it's just, people like you and people like me who've discovered this for over many years have put things in place to ensure that in some cases, not only do we survive, but we thrive massively. And in some cases, actually, your business gets stronger because you actually don't need to be there for the teams that you've already got to make the business stronger, even without you. And that's the essence of wealth building. I hope that helps. Give the 7.
Yeah. No, that's superb. And I think I'm all about working less and earning more. I don't think there's, it's one thing that I think start to appreciate more as you get wealth under your belt is the time, and that A, you've got left, and B, what you do with it. And I'm all about leveraging other people buying time and making sure that you can use your time as you see fit. So I assume most of your clients will come and only have the first 3 pillars typically, and maybe then start the four. Maybe they've got a couple of the four maybe not ticking in the way they should be.
Yeah, that's probably characterized it about right. Most people realize, they're on a journey, and when they look at it, there's something as a catalyst, that stimulates them to wake up and smell the roses and go, hang on a minute, this isn't going to work. Either it's redundancy, or it's a health scare, or it's, in my case, my dad, that's why I started. My dad died when he was 46, and we were genetically just carbon copies of each other. And I thought, as a young economist, that's my degree, way back in the very late 70s, early 80s. Bloody hell, if I go when my dad goes, I can't save enough in a job. Even as a bright economist, I just couldn't save enough. I had to build things that I could own that would work if I went early. Now I've survived. Kind of, you look at me now, I'm way past 45 or 46. However, that journey stood me in good stead. And when I started the journey, I didn't know about pillars. I just knew I had an intellectual ambition to test myself, and with my wife on board, giving me permission to say, look, I know where you're going, and I'm supporting you. It was really helpful. But there's always a catalyst in someone that stimulates them to do something. And often they'll either have nothing, or they'll have a little bit on something, but they haven't got a plan. And what they're kind of nervous about, I think, and I think you probably could see it out there, is there's an awful lot of information out there. I mean, crumbs, 24 hours on Airbnb, right? So there's a deluge of information. In some cases, a bit like trying to get a cup of water out to Niagara Falls. It's just a deluge. And when you get a deluge, people kind of really struggle to get the right information. And often they'll either drift for too long because they just keep getting more and more and more information, not acting on it, or they get suckered into kind of courses, and they'll do another course that gives them more information, then do another one to get more information. And they're not acting on that. So they're not really enacting a plan. So what we do is, because we're holistic, we're not trainers in any one strategy or another. We work with people who are, because we know who's outstanding in their field. So we do gravitate to good people. However, we're agnostic on the subject of where you get your knowledge from, but we help people create a plan. And when they've got a plan, and there are steps in that plan that, we share with them, and we give them a monthly coaching call, so that, always knowing what they're doing. And it's really about a combination of things. And the first three of those are, great education. So I admire your point about investing in yourself. You don't have to do it all yourself. DIY culture is not really good when it comes to wealth building, because, you can just keep going forever and trying to learn something. Great support, and you've got to feel like you're getting supported from people who've got your interests at heart. And what's more important than anything else, I think, is the connections. So connecting to other people who are doing it, have done it, and who are willing to share and help you across the journey, across that bridge, if you like. And when you do that, the combination, and then we put due diligence in place to make sure people don't make mistakes. When they do that, and we call that the wheel of wealth, education, support, connection, due diligence, and only then action. And then each asset you build, you're turning the wheel full circle, not half turned, but all the way around. And then every time you get to the end of the wheel, you click, and that click gets you either a flow of cash flow, monthly recurring income, or a nice lump sum that you can use to develop another project, or to shelter some of that money in another more diversified vehicle. So we don't encourage people to do just property, or just business, or just. It's always about building things for diversification. And when you do that, you don't transact anymore, you transform. So you become different, you become better, you become more confident, and then you can leave a much bigger and better legacy, because you're passing on the wisdom. You're not just passing on cash or bits of property. See what I mean? So I believe in the wisdom, because I still, want to make sure that wisdom passes on to my family and my family's legacy. And we encourage all of our members, we call them members actually, all of our members to do the same.
Yeah. I mean, you see it time and time again, don't you, where successful business owners pass it down to their kids, and it goes belly up, because they've passed the money down and they've passed the operation, but they haven't passed the wisdom down. So that is true. It's funny, the catalyst part of it, mine was I didn't have a pension. And from 30, I always kept saying, I really need to do something about that. I need to do something about that. But then I actually was a financial advisor, and I'm probably the only financial advisor that doesn't want to have a pension. So I thought, what else can I do? So ultimately I gravitated towards property, and because I think, set up right, property can operate without you, and it earns money while you sleep. And, it ticks a lot of these sort of passive lifestyle type boxes. And as well as being a, fairly secure asset, it grows over time pretty much, and it creates cash flow as well. So that's how I got it. That was my catalyst, which projected me in there. And then I think it's up to yourself what you do with, as you say, the information and taking the action, because we see it time and time again. Listen, we're both coaches. We both have an abundance of people coming through, and we talk to a lot of people as well who might not come through. And we give, as you say, there's so much information out there that people can get so overwhelmed by it that they just don't know what the next best step is. And I think sometimes just getting people clear on that next best step is the best thing you can do for them. And if you're continuing to do that in a network that, you touch on network there, and a lot of people think they need one-to-one coaching to get them to where they need to be. I would swap a one-to-one coach 7 days a week for a powerful network 7 days a week. And even just bringing this back to the Clubhouse event we did last night, I didn't know half of the people that were at the expert panels, especially the ones over in Australia, United States, Japan, places like that. But we had a little group going on behind the scenes on Instagram just to try and keep it all organized, make sure that if people were burning out, someone else was going to jump in the chair, and chucking ideas around to keep the group flowing. And just from doing that, like, we've all connected. We're all now jumping on each other's podcasts. I've made a great connection, with a chap in France for some potential business on my new venture in Dubai and next year. There's just so many things have come out of that one small network that we had. And, as they say, your network's your net worth, right? And I couldn't believe in that, any stronger. I think it's hugely powerful.
I think, I agree with you on a number of different levels. And one of those is, when you've got, what surprised me, I suppose, over the years that I've been building communities is the willingness of the community to share. They don't feel like they're in competition, right? So that's number one. And the way we encourage our members to look at it, and I always tell them the picture of the St. James's Park and whatever. I said, right, so to get there, you've got to cross the Tyne Bridge, right? So they go, okay, and this is the Tyne Bridge. So what I want you to do is imagine you're crossing the bridge. But you've got to have, on the one hand, a hand outreached in front of you, asking for help and having humility to ask for it, but another hand reaching behind you to help somebody else who's just further behind you. And if you live your life with that open mindset, then the community will gravitate around you. So I definitely believe in the power of that. And the other thing about community is you get perspectives, even on similar things like you mentioned yesterday. Just to somebody sees something with a slightly different twist, and just a little one, and you go, that's a light bulb there, when we call that the first ROI, right? So we talk about ROIs, and everybody knows ROI means return on investment. But I say, no, the first one is you begin every day looking for one relationship, one opportunity, or one idea that's going to transform the way you think about your wealth. So you begin every day like a kid, being curious about what that day is going to hold and what opportunities are going to show themselves and who's going to connect with you. And when you do that, that's because some cheeky people, say to me, well, Kevin, you look like an old geezer. What the hell are you doing talking about this for? So because I love it. I don't need the job. I don't need the work. I'm not looking for coaching. I'm looking to really try and inspire some people and try and let them know that if they think slightly differently, they can get to where they want to get to. So I think that's a really great point about the openness and the willingness for people to want to be part of the community and give as much as they get, and that makes a big difference as well. When you're a giver, you'll receive more by virtue of participating rather than just looking for what you can get out of it. And that's, I think, the other big value of a trusted community. And I think the final point I'll make it, as you think about that point also, is we use a common language. It's almost tribal. We talk about pillars, we talk about wheels, we talk about, and I guess you were doing that yesterday. What's your channel and who's your channel manager? And you're using a language, and language binds people together. And I think it's just great when each asset will have a slightly different language. So, the more that you can learn, it's like traveling. You don't just want to travel to one place. You need that richness of travel. Now we can't travel, but of course we will do it again. You mentioned Dubai, you mentioned France, you mentioned Australia, and these are all places you want to go to. And that's the same with wealth. You want to try different things and look at different things and not get overwhelmed by the way we do that is to say, we only want you to take one thing this month. So what's the one action you'll take in the next 30 days that will move you well forward? No. Don't be looking 5 years down the line. Don't be looking next year. What's the one thing you can do this month with the pillar that you're working on, and do that? And then you get some income, and then you watch, we call it your thermometer. You see your wealth thermometer rising. So, okay, you start with 0. It's now 100 quid a month. Right. What's the one thing you're going to do this month to get that to 150 or 200? Right. Do that. Right. What's the next thing? And then what we find is the momentum.
Yeah.
Doing small things helps people rather than trying to think about what's the best thing I can do and then do nothing.
What, because I come from a very action orientated background. I've always done it, whether it's as a kid wanting sweets off my dad, or whether it's, wanting to go and play a certain sport or whatever, but for me, it's like, if someone gives me an idea or something that I think is going to be good, I just instantly take action, and I kind of chuck all the sort of doubts or, right now, right, I'm expanding to Dubai. I'm going to do my venture over there. Even with the, the sort of history I've got and how, well we've done over here with the Airbnb gig. I even speaking to my dad about it this morning. He's like, "Are you sure it'll work over there?" And there's always that, whereas I'm just like, let's do it, and so for me, I really struggle to understand when, we do strategy calls for people, or I can see them, downloading all information, ebooks, watching my YouTube channel, or even just getting involved in other people's programs, and then they do nothing with it, and they don't do anything with it. And it really frustrates me that they won't take action. Why do you think that is? Why do you think they won't? Because there'll be plenty here who this is resonating with, and they'll be thinking, that's me. I get all the information. I don't do anything with it. What do you think the main barrier is? Why do you think it stops them? Because I can't compute it in my mind, because I am an action taker. So it's difficult for me to say, well, I understand why they don't take action.
Well, I mean, and that's, I can see why that's difficult for you if you're a natural action taker, right? But, when we use a tool called Wealth Dynamics, and we bring it right to the very start of our relationship with our members, and Wealth Dynamics, it helps you understand, how you think, how you process information, how you make decisions, and you begin to get clues from things like that. So, for example, let's say, the big picture thinkers, the creatives, right? So, which is what we call dynamo energy. So, you'll probably be a creative, lots of energy, lots of drive, right? Yeah. Now you're taking that drive and you're driving it down a pathway to get a result. What big picture thinkers often do is they think with so many things, and they've got 10 ideas before breakfast. And instead of focusing on the one thing, they'll think, well, that's interesting, but I'll just find out a little bit more about that because there might be another idea around there. And what about this Bitcoin thing? Maybe I've missed out on the crypto. Oh, Airbnb. Now Ryan said Dubai. I best check into Dubai. He's a smart guy. I look into that. And they just keep bouncing like bagatelle off the wall with ideas. And it's because what drives them intellectually is the gratification of challenging themselves to think through ideas as opposed to the action. And the way to do that is to be strong with them. And that's where they do need a coach, actually, because you need to harness that driving engine and say, yeah, but what's the one thing you're going to do?
Yeah.
So, stop thinking about those other things. We got them all on the list. These are all the things you're going to try. But what's the one thing you could do this month?
Yeah.
Or the next 90 days, if you can't do it in a month, what is the one thing? And then let's just do that. Let's do that together. And then they do it. And then they you've got to keep them from drifting that path. The other opposite of the creator is the analyzer. right? Somebody who's into the detail. They won't want to be on Clubhouse, so they'll be like yawning about that. They won't want to be on Facebook. They won't be on those places. They won't be where lots of people are. They'll be at home with a spreadsheet, looking at data, analyzing the hell out of the data. I just need to check that a bit more. I just need to dot the I's and cross the T's. I just need. I haven't quite, and I hear it all the time. I haven't quite finished the book about, you don't need a book to be wealthy. You know, what do you want to do? If you're going on holiday and you're having a wonderful trip around Italy, do you want to read the book, or do you want to get there and go and work it out and find a guide who can show you around some incredible place? Or just want to keep reading the next guidebook, the next guidebook, the next guidebook? You know, sometimes you just got to do it. But they'll overanalyze, and they can't get out of that habit. So the only way they can get out of the habit, both sides, either the creatives or the analyzers, is to be helped. And sometimes they won't seek help. You know, the analyzer will sometimes be a DIYer because they think they can learn everything. You'll find them next week learning how to drill your own teeth. You know, they'd rather do that than just get a dentist to sort it out for them, right? They'll try and learn everything instead of learning enough to do something. And it's a whole combination, and we call it the DIYers, the drifters, and the delegators. They're the three people. There are three reasons why people stop. They want to give it to somebody else. Oh no, it's too hard. I'll let somebody else do it, and they put that money in the stock market with financial advisors. The DIYers want to learn everything, and the drifters are just bouncing off the wall. So they're the reasons, really. They just need to be harnessed into a way that they trust enough in somebody to help them. Otherwise, they will just keep going around that same endless loop. And I meet them, you know, and they frustrate me, but what can you do? You know, it's 50,000 people I'm trying to help, not 50 million. So I just let them go and say, well, look, if you spend a year with me or talking to me and you still haven't done anything, you ain't gonna, you know. It's probably best you don't frustrate me or me frustrate you. We just, you know, should just move on. And it's fine to be intellectually interested. You know, I'm interested in football, but I don't play it, you know, so that's fine. But I'm interested in wealth, but I play. I'm in the game. I'm participating in the game. I'm not a spectator. And they want to spectate. And there's actually nothing wrong with spectating as long as you don't kid on. You want to be in the game.
Yeah. No, that's so relevant to property as well. There's so many people, I want to get into property and you know, never do anything about getting into property. Waiting for that next quick fix or magic wand or tree to sort of just drop on them and say, oh, well, here's a portfolio. You know, all of a sudden.
Yeah. Well, you hear it with COVID. I've heard some people, heard somebody say he was making an inquiry into joining my community. So what do you really think I should be doing property now with the market? I'm saying, if you ever use the word market, it means you believe that somebody else is in control of all of your decisions. The whole thing about markets is you use your own creativity. You learn where the opportunities are that force appreciation and create value, irrespective of the state of the market. And win opportunities, whether the market's up, down, or sideways. So please don't think about the market. That's what happens to you. You know, it's what you do that creates value. So and that's the essence of the pillars. The pillars on the left-hand side, the property, the business, the IP and joint ventures. You do, you know, you see and you create value for yourself. The other side, you're reacting to the wind that blows on them from the market. And that's why people don't get wealthy there. You just can't get wealthy there unless you stick with the stock market for 40 years. But remember, my plan was I didn't think I'd live that long, so I didn't want to wait 40 years.
Yeah.
But no, I didn't.
Cash flow into your life and use it and enjoy it. And if you get some asset growth at the end of it, then happy days. But cash flow. But for me, I think most of the entrepreneurs I've come across who, you know, do very well for themselves tend to be, they've created a business out of solving a problem.
Yeah.
All the time. Like, you know, we talk about the analysts and, you know, and all the different character types. But for me, the people that just had a problem, solved it, and then created a business out of it. You know, I mean, that's exactly how I got in Airbnb. You know, I had a problem getting a 1-bed flat rented out. I just couldn't figure it out. Like 5, 10 viewings had gone through, and I was like, why is no one making me an offer to rent this place? Even just trying to chip me on the rent, like no one was making. So I then had a coffee with a friend and got into Airbnb. I thought, well, why not? What have I got to lose? Bought some furniture, took some photos, and away we went. Solved my own problem.
Yeah.
You know, and then I realized I could solve landlords' problems by helping them get rid of their void properties, and helping them create more cash flow out of their properties, and just by solving those problems, the business built, and then you continue to solve your own problems.
Yeah, that's a great point, and I think we're speaking the same language. It's just we just coming at it from just ever so slightly different angle, but it's only slightly different, right?
Mm-hmm.
Because when you look at the wealth building pillars, it's all about finding where you can add value, and value means solving problems. It's what an entrepreneur does, is solves the problems that you see in the world, and whatever that is. If it's property, you're solving the problem of a tenant or a landlord. If it's business, you're solving the problem of a customer in some way, and so on. So if you're creating IP in books, you're solving the problem of a readership or an audience, or in my case, a membership. You're solving those problems. So it's the very essence of doing it and solving a problem. Ideally, I talk about, certainly in business anyway, not so much in property, but in business, that there are three key components, and I call them my 3-point plug. When you're looking for business, if you're in business, you want to be doing three things. Number one, the business must have the ability to create recurring income. Number one, by far. And that puts an incredible value on a business, because any acquirer of a business is always looking for guaranteed profit. The reason why businesses are sold is the acquirer wants the continuation of the profit. Well, if you can show it's recurring, you can show it's there. Number two, the business can, even if it doesn't at the beginning, work without you being in it. Cool. Right. Okay. So, because then the acquirer doesn't worry about you having to be there and taking money out of the business, because you don't need to be there. So they can just guarantee that profit. And then number three, choose a niche. Find a problem that you can really nail in a very tight niche, so that by being in the niche, you can be outstanding in there. Because when you're outstanding in what you do, you can create incredible value. And also that can lead you to things like intellectual property, because you solve a problem for such a great group, that group becomes a tribe, and that group starts to follow you. And then you can create courses and memberships and books and audios and all sorts of different things. So one thing leads to another. Whereas if you just try and do everything to everybody, you don't solve anybody's problems at all. And I think that's what you're doing, and how you're articulating what you're doing. And we're just using slightly different language to say the same thing.
Yeah. No, it's amazing how, like, top level business people all think so similar, and they just have it in their own different ways, but it still works, and that's what makes the world tick, isn't it? And it is fantastic. So have you got any questions for me? Sometimes I know we had a podcast and I got asked a lot of questions, so probably not. But, I do tend to ask that at the end of a podcast. I mean, one thing that just for the listeners who are, looking at building property portfolios, you talk about the recurring revenue there. A lot of these people are pitching estate agents, asking to take properties off landlords that they've got on their books on management fees to take on rent-to-rent deals. Well, as we've touched base on there, the value of a company is based on the recurring income that comes into the business. So if the estate agents lose that 10% agency fee, then their business value actually drops. So that's why they continually get these objections. And, it's all about thinking outside the box and coming from a different angle. So if you're getting constantly hit with the subletting objection, it's because they don't want to lose their recurring income, because it reduces the value of that business. But I've worked very hard in the last 18 months to take myself out of the business operations. Not because I want to sell the business. I just I want to focus on designing it even better, making it stronger, more efficient, bringing in new revenue stream. Adding more, going to Dubai, adding an arm there, doing other things, So, and it's really important that you do focus on that and not become a DIY, as using your terminology, because we see that time and time again where people will buy a house and renovate it themselves rather than going focusing on getting another house and letting someone else renovate it and do it in a much quicker time frame and get it
Well,
rented.
exactly, and time is one of the greatest freedoms of all. I mean, I suppose I've talked a lot today about community and relationships, and I just love to see when people do things when they're outstanding in their niche, they're just bloody brilliant at what they do. And I just wondered if you've ever seen, just as you've been, doing your work and looking at other people, who you've noticed that's out there just really nailing and serving their niche with an incredible value. And while you think about answering the question, I just need to get some power. I've just realized I've forgotten to power up my laptop. So preparation is everything, right? So I'm listening, but I'm just going to get something. I'll see you in a minute.
Yeah. So why Kevin just popped away. I'll think about my answer to my question. I think there's so many examples of people really nailing their niches. I think I've actually been fortunate to be around a lot of, not a lot. I'm fortunate to be being around some high level sports people in my time and seeing them at work with their craft and how they, show up and put the work in behind the scenes to be able to then deliver the result that they work on. Most of them in the area of golf. Obviously, I was in that game for quite a long time at quite a high level, and seeing people craft their skill set on that front to be able to then deliver the end result is something worth watching, and it really is an incredible. And then you relate that into business, and you tend to see these. I know they're advised, but these sports people then go into businesses and start creating a bit like what Kevin's saying about all these different areas of wealth. They use their skill set. They then, create their brands and their wealth and everything like that come forward. And it's hugely powerful. And I think for me, I have, everyone says you need, is it the average millionaire has 7 revenue streams, something like that? Whether that's true.
Maybe they've taken a leaf out of my book, the 7 assets.
And I think it is hugely important. For me, I have all my revenue streams within a property bubble as such, but they are all different. So, if the service accommodation game's not working, my tenants and my HMO tenants probably still are. I've got a cleaning and linen business, which kind of serves the HMO side of things, end of refurb, deep cleans, and obviously the Airbnb business. So we've got a management service as well as a rental service. So there's within the one sector, I've got a lot of revenue streams. I used to invest in stocks. My worst decision ever, but at the same time, you cannot look back like that. I bought Facebook shares on the IPO, and I sold them. And now I look at the share price and just think, what if I just kept hold of them? But hey, you cannot have all. I guess I've used that money for other asset classes and put it in different places. So I'm probably not at a total loss, but it does upset me at times when I work out how much they would be worth right now. Because I think I picked them up for, I want to say something like $14 a share. And I don't know what they're trading at now, but probably north of 200, I would say. But we all make these decisions in life, don't we? And that's the way our life works.
Yeah, we all make mistakes. I've made mistakes in business as well, and investments. Not too many, but enough to say, hey, that's the whole point. You're putting yourself out there to take a risk, and you're expecting a reward. But sometimes you go, actually, that didn't work out, and you learn something. You become a better entrepreneur by doing it because you're not putting your whole assets at risk. And in fact, what's interesting about you saying multiple income streams from millionaires and multimillionaires is the fact that if you can do something and you can create recurring income, not that I'm advocating people need to sell things, they don't, but sometimes it's good to think about, well, if it can run without you, it can be sold. So if it can be sold, it can be valued. And if it can be valued, if you ever want to, you can capture a value from that. Particularly if you can get entrepreneurs relief, and as long as that's around. So I'm selling a business at the moment, and it's important to me to take some money off the table. I've done a good job, and I'd like to get something back out of it just because I want to. Anyway, the more confidence you get by saying, well, I built this business. All my businesses are around finance in some way or another, mortgage business, an IFA business, a SaaS business, a membership business, and so on. And the more you build them and the recipe that goes in, you could build another one.
Yeah.
You're willing to try new things. Like you, Dubai, your dad can't comprehend Dubai because probably your dad doesn't have that richness of experience of those different businesses. But you have, so you can go, well, yeah, I can do that. I'm confident it will work. And if for any reason it didn't work, it's not the end of the world, because you can come back and you've still got businesses that will continue to serve you. So I think
I read a great book. I can't remember the name of it, but it was about these two, and I was talking about this on Clubhouse yesterday. These two business partners in the States, they built a business up to 15 million within 3 years. And one of the business partners went to the accountant and said, I need to take some money out of the business, blah, blah, blah. And he basically said, there is no money in the business. And he's like, what do you mean there's no money in the business? Like, we've just been hit this morning with X, Y, Z. Basically, the other partner had a gambling problem and he gambled it all away. And there's two ways that guy could have gone. Obviously, he could have blamed the other guy, tried to sue him and probably got nowhere, and just wasted a load of energy. But he just stood up and said, this is my fault. I haven't kept an eye on the accounts. Full responsibility for it. Went and built another business within 3 years up to 10 million. So you talk about, just because he knows he can do it, he's done it, and he's got that skill set. And so what you're saying there just resonates so true with that story.
Right. Yeah. So I think what I've enjoyed over my years of doing this is I've begun to really establish well, both in my mind and in my teachings, principles. So people ask me opinions and things. Of course they do. When you reputationally, someone's going to say, well, what's your opinion about this? And I have a standard line on that. Number one, if we're talking in a business environment, we're chatting about you building wealth or doing something, I won't give you an opinion. I don't deal with opinions, I deal with principles. So let me tell you the principles. That will mean that my opinion is irrelevant. But if somebody wants an opinion from me on something, say there's a condition and it's a glass of wine in my hand that you paid for. If you give me a nice glass of red, I'll give you my opinion, but only until it's finished. That way people stop asking me opinions, right? So, because it's irrelevant what my opinion is on anything, because all I do is deal in principles. Principles work. Opinions, everybody's got them.
Yeah, just go down the pub when you can.
yeah.
Plenty of bar rooms.
On Facebook, or anyway, people give you an opinion. But principles that work, I would rather have them every day. And that's why when you're tapping into those people and saying, well, I tried this and it worked, and I'm doing this and it worked, you're starting to build a set of principles that you put to work in your business, and then you turn that into something that can be monetized for you or monetized if you choose to sell it.
Yeah, no,
it's more valuable.
Superb advice. Superb. Kevin, this has been an absolute pleasure, and I am more than positive that everyone watching live right now has had some huge value, and all the listeners, when the podcast does go live, will as well. I am obviously very tired, and I know you're a busy man, and also it's Friday night, so we might as well, you go and have a glass of red and I'm going to have a nice cold beer.
Dry January, but I will do one another night, right? But not tonight. Yeah. Okay. Thanks for the invitation, Ryan. I enjoyed it.
No problem. Hopefully we'll hook up again soon, and thank you for your time.
You're welcome. Bye-bye for now.